here this morning, so I'm going to start recording and then we'll get started. Good morning, everyone. I'm glad to see you all here this morning with us. My name is Frances Klingenberger, and I work at the Greater Bakersfield Chamber. And I'm happy to welcome you all on behalf of the Chamber and the Bakersfield Young Professionals to our day. Is typically a one-day event, but because of everything happening in 2020, we couldn't be together, so we expanded it to cover various topics virtually over the course of a few months. So we're actually in the last few weeks of this summit, and a few of our upcoming webinars will include diversity, equity, and inclusion practices, entrepreneurship, and a few topics on health. At this point, I'm going to turn it over to my coworker, Hillary Haynes.
Thank you, Frances. Well, good morning, everyone. I'm Hillary with the Chamber. It's good to see you guys this morning. I'd like to thank our sponsors for supporting this program. So, of course, we have Strata Credit Union and Comprehensive Blood and Cancer Center, and also Kearney's Business Technology Center. Without your support, we could not be able to bring you these free weekly webinars. And just to go over some Zoom etiquette, we are recording this session because we upload it to the Chamber's YouTube channel afterwards. So if you missed something, if you want to follow up, or for those who registered and couldn't attend, you guys can go back and check that video out. And then if you guys, everyone, if you could mute yourselves just to kind of help reduce any background noise and feedback. And then if you have a question, we hope that you guys will ask it in the chat, or feel free to go off of mute, unmute yourselves, ask your questions. We want this to be as dynamic and engaging as possible. All right, Frankie, back to you.
Thanks, Hillary. So now I would like to introduce our speaker today, Delmy Escobar, who has worked at Strata Credit Union for nearly 10 years now. Starting out as a teller, Delmy shortly became a loan officer, which gave her a strong backbone on credit and making smart decisions about money. She later moved into the marketing department and recently was promoted to supervisor in Strata's lending department. So Delmy, I'm going to send it over to you.
Hey, thank you guys. I'm really excited to be part of this, and I really thank you. It's an honor for me to be part of such an important topic. Who hasn't been impacted when it comes to money-making decisions, and credit is such a big part of really learning how to manage our finances and how can we establish a good credit. So I'll be playing a little video to get started, and then we'll go from there. Like I had mentioned before we started the video, I really want for everybody to feel comfortable about asking any type of questions, interrupt. We'll have some time to discuss different things when it comes to credit. But let me go ahead and get started with this video that we're going to be sharing. It's about 5 minutes long, but it will really cover a lot of what we wanted to discuss and cover today. So if you bear with me for one quick second, there we go. And this is free for all or everybody who might want to visit our website. Is under stratacu.org. And then we're going to go ahead and go to our resources, financial wellness, and we have our lovely Stratify, which is such a good tool for us to learn about different things. In this case, we're going to talk about credit this morning, and let me move this screen to the side. Here we go.
A credit score is a 3-digit numerical rating that reflects how likely you are to repay your debt. This number is based on your credit history. Good money habits, like repaying your bills on time, can help keep your credit score high. Poor financial habits, like maxing out your credit cards, can bring down your credit score. But who actually comes up with the credit scoring system? Credit reporting companies analyze your credit history and calculate your score. Credit scores generally range from the low 300s to the mid 800s. These credit scores help financial institutions determine the risk level of potential borrowers. In general, with all other factors being the same, a borrower with a high credit score will receive more favorable loan terms than a borrower with a low credit score. We'll start with the credit bureaus. In the U.S., there are three major national bureaus: Experian, Equifax, and TransUnion. They keep track of your credit history separately, so there are often small variations between them. Each credit bureau uses its own formula for calculating credit scores, and the differences in the equations may lead to differences in your credit scores. While the bureaus do not disclose the exact methods or formulas they use to calculate your score, we do know the factors that they consider. Select each portion of the pie to learn more. These percentages are approximations and may change, but they can help you learn about the habits that impact your credit score. About 35% of your credit score is your payment history. Things like, do you pay your bills on time? Do you always pay at least the minimum amount? If you do, then you're in good shape with payment history. If you make even one late payment though, it'll likely have a negative impact. That's why it's so important that you always pay your bills on time. Or to put it another way, always pay your bills on time. And always make sure you're paying at least the minimum amount when you do. About 30% of your credit score is determined by the amounts you owe, which is made up of two parts. First is the total amount of money you owe your lenders, which includes loans, credit cards, utility bills, store cards. You get the idea. The second part is the percentage of available credit that you're using. People who are using less of their available credit are considered lower risk than people who are using a lot. And a lower risk means a better credit score. For example, if you owe $900 and you have a $1,000 credit limit, you're using 90% of your available credit. You'll likely have a worse score than someone who's only using $300 with the same limit. The length of your credit history makes up about 15% of your credit score. This is the amount of time you've been using credit. All else being equal, someone who's been using credit for 10 years is considered less of a risk than someone who's only been using credit for 10 weeks. That's why it can be a good thing to begin building your credit history early. About 10% of your credit score is based on the amount of new credit you've applied for recently. This is measured by how often your credit gets checked by lenders. So every time you apply for credit and the lender runs a check, your score drops a little bit. This includes things like applying for store credit cards too. People who apply for a lot of credit at once are seen as credit risks. The types of credit you have impacts about 10% of your credit score. People with a mix of credit types like credit cards, an auto loan, and a mortgage may have a slightly higher score than those with only one type.
All right, guys, so that pretty much ends the video, and we're not going to do the knowledge check since we're going to be discussing about it during this session. And I really want to cover the 5 different things that she was talking about, how our credits are being determined by the credit bureaus. So I know you all may be familiar with the 3 bureaus, Experian, TransUnion, and the other one was, who remembers the third one? Equifax. So these are the 3 credit bureaus that keep track of how we manage our credit. A lot of times we may be, probably some of you guys may have been told by your parents, you know, I'm going to add you to my credit card so you can start building credit. Or probably, you know, some of us got a mom or a dad to co-sign for us because we didn't have a well-established credit. So as she was mentioning, credit is such an important part of our lives. You know, it may go from us applying for the first credit card all the way to buying a house. It may range between, you know, I don't know what place you are in your life where you're wanting to possibly start improving that credit, building that credit. And today we just want to cover how we go about that. So first and foremost, I was just thinking yesterday about credit and how this impacts not only our lives personally, but also our families. For those who may have children, how is it that that impacts our children? If we know how to build a good credit, we're gonna most likely teach that to our children. If we are struggling to understand how do we fix our credit, I just want you to know that it is possible, it is doable. And today I want you to be encouraged that we will cover all of that. So in the video, it was being said about the payment history. Whenever we have a credit card or an auto loan, a signature loan, a mortgage, whenever we apply for a new credit, lenders look at that credit history to see how we've managed payments, how we've managed the debt that we have. Like she was saying, if we have a credit card for $1,000 and we usually keep it at the maximum balance, most likely our credit is going to be affected, because not only shows that we may not be responsible enough to control ourselves when it comes to spending. Making minimum payments are really not a good idea. We really want to get into the habit of paying off balances. And the best way that I can present it to you guys today is saying, if you have a $300 credit card, please do not keep that balance to $299. It's a small credit card. It's easy to pay it off every month. It's easy to control that. The same example would move if you were to have a credit card for $5,000. So what I usually tell people is, if you have light credit, meaning you don't have a lot of trade lines reporting to the credit per se, you may have 1 or 2 department store credit cards, get used to paying those balances off every month, because every time we make a minimum payment, we're only pretty much paying the majority of that towards the interest that the company is charging us to lend us that money. So let's say that I have a $300 credit card with, I don't know, Target. I charge everything because I'm getting that 5% discount. Who doesn't love discounts, right? We all do. But we may forget that we need to pay that off. If not, the 5% discount that was given to us, guess what? We pay it back with a 20-25% interest rate that they're going to charge us for the money that we're borrowing from them. So getting into the habit of paying balances off will be ideal. However, if we're not there, if we are still trying to learn how do we do this, let's say that if I were to have a credit card and the limit of that is $10,000 and I'm right at $9,000, my credit is going to take a big hit, because not only it's unsecured debt, meaning there are different categories when it comes to the type of debt that we may have. We have unsecured debt, which is pretty much credit cards, personal loans, lines of credit without having a collateral behind it. Then we have secured loans, which are auto loans, mortgages, second line of credits on our houses or our condos or whatever we may have. Those are a little bit less riskier for lenders, because if we default, if we don't make those payments on those, guess what? They will go get that nice car that we bought. They may just go ahead and repossess it, or they may just take the house from us. And it's less likely for us to default on auto loans, because we need our cars to be able to move from point A to point B. So credit cards and unsecured debt or loans are a little bit riskier. Therefore, the interest rate that they charge is a little higher. So going back to the $300 credit card, because I think it's just such a good way for us to understand how all of that works. If we're good at paying off our balances, carrying low balances, lenders will increase the limit on those credit cards, because they do want you to utilize it and then obviously get in debt, because then all of a sudden, we are getting charged interest, right? So today I really want you to think for a minute about your finances. Think for a minute about, okay, let me think, how many credit cards do I have? Do I have too many, or do I need to add more trade lines so the credit bureaus can see that I'm responsible and I know how to pay? If, per se, somebody has a credit card of a $500 limit and the balance on that is about 100 or 200, then you have another credit card with a balance of 1,000, but the limit is 5,000, that will look really nice on the credit, because the limit is high, the balance is low, therefore it shows that we are able to know how to spend responsibly, and we don't push those debts up where if anything were to happen, most likely we will default on those payments, right? So going back to that, and that's why payment history is so important, because it takes 35% of how we are scored when it comes to our credit score. If I have a credit card with a high balance, making minimum payments all the time, most likely my credit is going to be impacted. Once again, that takes 35% of how our credit is being scored. 30% is what the amount is owed on those lines of credits or credit cards. So once again, if we carry high balances close to the limit, our credit score is going to be affected. The bigger the limit, the smaller the balance, the better the credit score will be. If per se, a lot of times we go shopping and we're like, you know what, I'm going to spend $100 and get into the habit of already thinking I'm using my credit cards, not because I don't have the money, but because I want to establish and build credit. That is really, really good. However, a lot of times we use our credit cards because we like to spend. Truthfully, I've been there. I like to wear nice clothes every so often, but then the reality hits me and I have to be realistic. Okay, if I spend $100, I need to pay that back as soon as I can. So setting up goals to be able to pay our credit cards or our balances is really, really important. 30% of, actually 15% of the credit is also weighted with the length of the history of the credit that we may have. If per se somebody is 18 and they opened up a small credit card when they were 18, now they're 28, that's 10 years worth of history showing how we're able to pay back or how we've been able to build a credit history that reports to the credit bureau. If we only have a year or 2 years, so many different things can happen within that time frame, and that's considered a light credit, meaning the history is not there, the experience is not there when it comes to how we handle our debt. Another good point that she mentioned was new credit. A lot of times we get those nice offers in the mail saying you've been pre-approved for $5,000, you've been approved for this amount, and it's very, very easy for us to fill it out, send it over. We may get you were approved letter, or we may get another letter saying you were declined. Why? Because a lot of times they send those letters for people to apply. Then when they do a credit check, they're able to see how people are managing their credit. So being careful as much as we want when it comes to having our credit run is very important, because every time our credit is being run, if you're submitting an application for any type of credit, it is a hard inquiry. So some hard points will be taken away from your credit score. Every time I look at a credit report, I go right under the very last part of the credit. It shows all the different inquiries, meaning where has the applicant gone to apply. If I don't know if somebody's applying with us right now. I don't know if they went to another lender yesterday. What if that loan got approved and it's not reflected on the credit? What if their debt to income ratio changes because when we were doing the application, it didn't show that debt that they might have gotten yesterday? So being careful when it comes to running our credit is very, very important, not just because I'm going to get a 5% discount, I'm going to be going to every department store and have my credit run. It's not worth the hit that it may take from doing that. Types of credit. This is such a good thing when it comes to what kind of credit do we show on our credit report. Do we have just credit cards, or do we have that auto loan history reporting on the credit? Do we have a mortgage that is reporting? Do we have different type of credit reporting that shows the ability that I have when it comes to paying that debt back? So it's very important, and that takes about 10%. It's a small percentage, but it also impacts our credit score as an overall. I don't know if you guys have any questions or any opinions that we can look at or answer.
Delmy, it looks like Kathy has a question. She said, I was told that inquiries have a low effect on your credit. You said it is something you go to straight away.
Well, If somebody's requesting a loan and they get that credit check, it's really hard to determine how many points are taken away, because if we do a credit inquiry to apply for a loan, 6 months ago, now I'm applying for a different loan, it'll show. But if I'm just going and I'm running my credit repetitively, it will affect it, because then we as lenders, we're able to look at that, and obviously it's showing that people are wanting to get more debt. So it does affect it. It may be, there's some companies that will let you know this is a soft inquiry, meaning it's not as hard as a hard inquiry when it comes to applying. So it's really hard to determine. It's really up to the lender to disclose that information, and for us as consumers to ask those questions. I don't know if that answered the question.
It does, thank you. Sorry, I get the difference between a hard and a soft. So if you're going to go look for a car and you have obviously to do that, you have to give them your social, versus going into, Macy's and filling, letting them do that, kind of thing. That those are two different situations is basically what you're saying. Or somebody's looking to shop a home loan or a refi or something like that. That's different. But you're saying that gives you a heads up that they may be looking and shopping elsewhere, and that could be problematic. So how do you suggest then, if somebody's looking to do a refi and they are shopping it around, seeing who has what, how do they go about that in a way that that inquiry doesn't hit them?
Good question, Kathy. Excellent question. What I usually suggest, not only to our members, but in general, get pre-approved before you go car shopping. A lot of times we see people coming into the credit union, and they understand that whenever they come in to do an auto loan application, we will go ahead and run the credit. We will have that open discussion about what is the minimum payment that you're wanting to have, what is a comfortable payment. Whenever we do that process, let's say that if we need to verify their income, we get that up front. Whenever we give that pre-approval letter, the consumer has the opportunity to go shop around out of Bakersfield, go to different dealerships without having them to run the credit. Because whenever you are auto shopping or car shopping, whenever you go, the dealership is going to submit your information to different lenders, and then they will see who may offer you a better deal. There's so many different components when it comes to the dealership, whereas as a consumer, if you get a pre-approval letter, you would know upfront what the interest rate will be, because a lot of times, even if you go to the dealership, that is not a guarantee that the interest rate will be what they're quoting on that purchase order. Because let's say that, and that is based on my own personal experience, about over 20 years ago, when I first bought my auto, my very first brand new car, I went to the dealership. Obviously, they're there to do something, and that is to sell, to sell cars. I got my car, drove away. A week later, they're like, you know what? We couldn't get you approved. We need to get that car back. I was devastated. I was like, what? I've had a brand new car for a week. And they're like, yep, the lender didn't come through. We need the car back, or you would have to pay a high interest on this auto loan. So fast forward to what is now, consumers, and the more we know, the better it is when it comes to making those decisions. What I usually tell people whenever we go to a dealership, take the time to ask those questions, because we're making a big investment, a big purchase. It's not something that I can just go ahead and return the next day if I'm not satisfied with the product, to say the least. So getting pre-approved will give you that negotiating power. You'd walk into a dealership and say, you know what, this is what I want. And I'm already pre-approved. Once the person, our member, is 100% sure that they want to go ahead and do that purchase, then we can go ahead and move to the next step, which is giving our information. They would run the credit, because they want to make sure that if the credit union, in this case, or any other financial institution that you've been pre-approved with, were not to pay them, they can still submit that loan and get paid. But getting pre-approved is one of the best things to do, because once again, you get upfront all that information. What is the interest rate? I don't need to provide any additional information because I already did it. And then we would get in touch with the dealership and say, hey, you know what? She's been pre-approved. We're ready to go ahead and up to a certain percentage, 25,000, whatever the case may be. how do we negotiate this for us to finalize the loan? We can send you the payment or whatever the case may be. And nowadays, there are so many different options that makes it really easy for people to buy their cars. Not only that, but all the other different products that come with the purchase, gap insurance, extended warranty, all of that, it's part of what they offer at the dealership. And the more you know, the better it is for us to negotiate and get a really good deal when it comes to buying a car.
Thank you.
Questions?
Tell me, to kind of segue with buying cars, did you want to talk about Strata's auto loans?
Absolutely. That is super great, because we're really trying to help our community, and that's part of our DNA, being involved with the community, making a difference. And that's what we're partnering with Bakersfield Young Professionals, because I think one of the most needed information is about credit, and how do we build it, reestablish it, or keep a good credit score. And with that being said, the credit union is offering a 2% discount on any existing interest rate that people may have. Per se, if somebody has an existing auto loan with a 5%, we can bring it down to 3%. We do have a floor, which is 2.99. We can't go any lower than that. But any rates that people may have out there with a high interest rate, we can lower those. We will keep the same term, meaning if I purchased an auto, per se, January of this year for 16 months, and I already paid on it 10 months, I can drop it to 50 months with a 2% interest rate discount on that. We're not looking into our standard way of underwriting an application. Is very straightforward. Provide proof of employment, pay stub. Let me see what the current interest rate is, so we can drop it by that 2%, and we'll take care of making sure that people are saving.
Great, thank you, Delmy.
Do we have any other questions?
It looks like there's one that just came through the chat. So why is it so difficult to improve your score, but so easy to damage it? How is that fair?
Oh, that's a good question. Because like anything else, it takes time to really prove that we are responsible when it comes to paying back. It is easy to get in debt. And we've been sold the idea of keeping up with the Jones. It's always trying to, upgrade to a newer car, upgrade to a bigger house. But when it comes to the reality of our finances, very few people will be straightforward and honest about it. So we've seen it very, very often when, somebody's applying for an auto loan or a credit card or a personal loan to get out of debt. And we do those loans all the time. We really want to help our community to not be paying 25-30% in interest rate. The highest rate that we offer at the credit union is 18%. That's our cap. Nothing goes over that. So whenever somebody is wanting to consolidate their debt, a lot of times we say, yeah, we're wanting to do this. Let's get you out of debt. So let's say that somebody paid off a $10,000 credit card that they had with one of our loans. We pay that off. All of a sudden, the person goes back to zero, but 6 months to a year, a lot of times they use that credit card and come back to that high balance again. So as I was thinking about this credit session today, I was really analyzing so many different things and all the different things that we see when it comes to credit. One of the biggest things that I thought about it deep in my heart was that credit has nothing to do with a social status, with how successful we may be in our careers. Credit has nothing to do with how well educated or uneducated we may be. It's a simple matter of being committed, being responsible, and choices in decisions that will impact our daily lives. You know, for me, having peace of mind is very important, and I'm sure that is for many of you guys. So when it comes to credit, I don't want to get to a point where I'm like getting phone calls because I forgot to make a payment, or probably somebody, you know, calling me and saying, you know what, you were declining on your next auto loan, or possibly not being able to become a homeowner because of the decisions that I took in the past. Today, I really want you to be challenged to think about our finances as something that really matters, not only in the present, but in our future. What are those goals that we're really planning about? You know, how are we working now, like today? So tomorrow, we will just go apply and they will not even question me because my credit speaks on about how I manage my finances. So it is easy to get in debt, and we all know it because we are consumers. We like to buy things. But today I challenge you to really think about it. And that's the way I think about it. Would I want to pay $20 or $30 in interest rate to a company, or do I want to put it in my savings account and not have to worry about all these fees that just because I'm not being careful, I have to pay to, you know, a different company? What I usually tell, and this is what I would always tell our members every time they would come in to do an auto loan application, credit card application, or even to establish a membership with us, pay yourself first. You know, we're really good at, you know, making our payments when it comes to the mortgage, the car, our credit cards, our bills, our utilities, but we forget about paying ourselves. You know, if we get into the habit of, you know what, I can afford to pay myself $50 and put that in the savings account. Remember, you're not going to regret it. Just put a little bit of money aside. You know, we've seen it. Things have changed, not only because of COVID, but in general. You know, our lives have changed. I was talking to my coworker when he was helping me to set up, and I said, I love those interactions where I can see people and we can have open discussions about all this. And he said, you know, this is how it is now, and things are changing. So I really want you, if there is something that I want you to keep and really keep in your heart, is, you know, save. Let's work towards improving that credit. That doesn't have to, having bad credit, it doesn't have to be a life sentence. We can all improve it, and we at the credit union offer different products that will help you. I can cover some of those if we have time. I don't know if you guys have any questions, because I'm already all excited about this.
I love that. Like, pay yourself. I like that. Simple advice. I guess a follow-up question to that other one would be, so you mentioned the different products that you have to help people improve their credit. What are some of the quicker or faster ways to improve your credit score?
Okay, perfect. I like this. So we've seen it all the time. So let's say, and I like to put myself as an example because I'm an open book. I do not have any problems with my walk in this life that we all get to experience. Having bad credit can be fixed. We also offer different guidance. Let's say that if I were to have all kinds of collections and all kinds of different things reported on the credit, we do have help with those. We have Green Path, and I can provide that information afterwards if needed. I also put my direct line as well as my email on the chat. If anybody wants to reach out with a very personal question, please do so. Let's work towards, you know, establishing a good credit or reestablishing a good credit. So let's say that I only have negative late collections and all those things reported on my credit, but nothing is reporting that I am a responsible person now. Let's say that 3 years ago, I lost my job and I couldn't keep up with all those payments, and I haven't done anything about it. I just have collections and charge-offs reported in the credit bureau. The best thing that we can do, if we can't resolve those collections right now, the best idea will be to have something that will report on the credit that I am responsible and that I've changed and that I'm able to keep up with the payments. So with that being said, we've designed and created what is called a credit builder loan. The way it works is that if somebody wants to go ahead and apply for one for $500 because a $50 payment is comfortable every month, we will not give the funds upfront to the member. We will wait till the loan has been paid in full, and then we'll release the funds to the person. So not only that helps to save, but also it starts reporting to the credit bureau saying that that person is making the payments on time, repaying that debt back of a money that they haven't gotten yet. Because remember, we only have the history reporting on the credit is just negative. So we do want positive reporting on the credit so something can start building or establishing a good history again.
Okay. A couple other questions we have. So what is considered a good or great credit score?
Oh, okay. That really depends from the lending per se. One of the amazing things that I love about our credit union is that although we look at a credit score, we look so much more than just a score saying that I'm a 500 credit score. We want to hear and know what happened. How did that person get into that situation? Once again, life happens and we're aware of that. So when it comes to having a good credit score, and I've seen it all the time where I was reviewing an application and it really got my attention because it was a very light credit. And when we talk about light credit, it's something that is just probably established within a year or two. And I was looking at this credit application and I was looking at that. The person was making payments on time on the auto loan, but there was a medical collection reflecting. And I said, this person has been responsible for the last 10 months making payments on time, but yet the credit score is being so low because of that medical collection. So I didn't want this person to be receiving or thinking of her or him as a 599 credit score. To me, she has paid well, is just a light credit. So making sure that we assess different things, not just once again, I'm going off the tangent when it comes to really what is a good credit and what's a bad credit. To answer your question, because I'm going all over the place, I would probably think that anything that is 669 and below, it needs to be improved. 670 and higher, it's good. We're aiming towards a really good credit score. We might need to make a few adjustments, but once again, somebody may have a 750 credit score because mom or dad added them as the authorized user for that credit card, but they don't have any history of managing credit. So it goes both ways. I can have, let's say that once my son turns 18, I add him to my credit card as an authorized user, but I don't let him, I take that credit card away because I'm the one who's making the payments. Having a 750 credit score is not being fair for the lender because my child doesn't have any experience when it comes to making his payments on time. So it's a combination of different things. Somebody may score low, but they have paid everything satisfactory. So once again, to answer the question, different components, different things to take into consideration, but 669 and below, it needs a little bit of improvement and we can help.
Great, thank you. This is a good one, a good question. So is there a difference between your business versus your personal credit score?
I would think so, although I'm not familiar with business lending, just because we don't do business lending and I've never worked in business lending. But I would probably think that they pretty much blend in, because if somebody's the owner of the business, it may reflect. And a lot of times when it comes to credit, a lot of times if somebody has used per se the first name and their maiden name, and all of a sudden they get married and that gets updated, the credit still pulls so many different data from different angles. So I would probably think it does, but I'm not familiar with business lending.
Any other questions, you guys?
I have kind of a follow-up to your answer on the great credit. So is it better for like someone trying to get approved for credit or a loan or something to go to you or like an actual person at another credit union rather than just applying for something online? Because then, like how you were talking about, you could look at like they're making their payments, but they have this medical thing going on. So you're kind of able to make that differentiation and then make a decision based on that. So is that different than when you apply for something online and like, you don't know, maybe it's a robot just looking at a score or something?
Good. That's a good one. That's a good one. Absolutely. So, yes, a lot of times, and when it comes to, oh gosh, you guys are so smart. I was like, oh my goodness, I know I'm going to have all kinds of different questions, and I don't know if I'm going to be able to answer them. But yeah, that's a very good question. One of the things that we really take pride here at the credit union is being able to get to know our members, get to know their story. And like you said, if we know things happened, I think all of us have gone through different things in our lives. And personally, I have. And I'm just, glad to be able to work at a financial institution that really cares for our members. We want to see them not just a number, not just a 3-digit number that is, generated by the 3 credit bureaus. We want to get to know their stories. And a lot of times because we do have, our system would, if somebody goes online and applies, we'll still review those applications, and we still pick up the phone and, call and ask those questions. Hey, I do see this and this and that. I have some concerns. But a lot of times you're absolutely right. The system would automatically just give a yay or nay based on the information provided. So I think either way is okay, but if you can go and sit down and have a good conversation with a loan officer, I think that makes a difference, because we're getting more information than what it is from a credit application without getting to know what could have happened. Let's say that if I had a car that was repossessed, 10 years ago because I got sick and I couldn't keep up with my payments. What if it was in the hospital for 6 months? We don't know. The system doesn't know. Computers don't know about those things. But if we explain that, I know that there's some things that may be reflected on the credit that are not good. And this is why, then an underwriter will look into that and take into consideration. Now, if there are patterns where somebody, filed bankruptcy, 10 years ago, and then they file bankruptcy again because that's an easy way to get out of debt and just, wash our hands and move on, then lenders will look into that and be like, there's a pattern already happening here. But, once again, to answer your question, personally, it's to me, I think it makes a difference whenever somebody walks in or picks up the phone and has that conversation with a loan officer.
Great, thank you.
You're welcome. Any other questions?
Delmy, did you, I know that Strata has, like you were showing, the videos and the different portals to go through to understand what services you provide. Maybe like it's an educational video. Where can you let us know where to find that on your website?
Absolutely. I can guide you through it. Let's see if we can get back in there. If we go to stratacu.org, right there, we have different options on the main screen. And if we go to resources, the 4th option down is financial wellness. And on that one, we do have 2 different great services that we provide for our members and for the community in general. People don't have to be our members to take advantage of the services that we provide. We have Green Path, and that is what I was addressing earlier today, saying if you may have collections, charge-offs, and things that have been forgotten or left without being addressed, you guys can most certainly click on this and get more information. Green Path has been designed to help people get out of debt or pay back those charge-offs, or if somebody's having issues or troubles, trying to keep up with their payments, Green Path is a great option to consider. And whoever is interested, they can just go there and click on that. And then Stratify is what we use today. It will take us to another page here. And then we have different options. I mean, I talk to my kids about money all the time, and they're very fully aware of money. And I want them to be. Money is something that a lot of times we don't talk about just because we want to make sure that our kids don't get worried about it. You know, I wouldn't want my 8-year-old to be thinking, oh my gosh, we may not have enough money to pay the bills. But I do understand, and I do acknowledge that they're smart enough to understand how careful we have to be. How do we start saving? You know, a lot of times we want to buy things right away, and we want to give our kids all kinds of different toys and things. And I've learned that life is not like that when we get older, right? We have to wait a lot of times to save, to buy a first car, to buy a house, and so forth. So you guys can utilize this with our youngsters, with our coworkers. We have different topics that we talk about, money basics for members. This one talks about all kinds of different good things, you know, benefits of a credit union, build emergency savings, checking accounts, credit scores and reports. That's the video that we show today. And all these other different areas that are so, so important. Then, you know, there's some other things that people can utilize for their benefit.
Thank you, Delmy.
You're welcome.
Any other questions? All right. Well, thank you again, Delmy. This has certainly been really helpful, and I appreciate your honesty and you sharing your personal story with us. And thank you again to Strata Credit Union for being BYP's program sponsor this year. And then another thank you to CDCC and Carney's for sponsoring this summit series. Now, for those who joined us today, Strata has provided our giveaway prize, which is a $50 gift certificate to Chef's Choice Noodle Bar downtown to support local, and then also some Strata swag. So we'll do that drawing later this afternoon and then announce the winner on social media. Francis, do you want to share our next upcoming webinar?
Yeah, thanks, Hillary. So we're so glad. Thank you, Delmy, for joining us today.
You're welcome.
And
Thank you.
sharing all your expertise.
Let's take a selfie. Thank you for having us.
Thanks. So we hope that you all enjoyed today's webinar, and also that you will join us next week for our webinar. It will be on Wednesday, October 14th from 10:30 to 12 p.m. And next week's topic is diversity, equity, and inclusion practices in the workplace. So if you're interested in DE&I practices in Bakersfield and Kern County, we will encourage you to join a local panel of diversity and inclusion professionals as they discuss the following topics: recruiting, hiring, and retaining diverse talent, why representation matters in your workplace, how 2020 has impacted the work being done in the DE&I setting, and how small businesses can implement diversity and inclusion practices. So some of our speakers will include our moderator, Carla Barrientos, a local educator and co-host of Hello Bakersfield podcast. And our panelists are Abel Guzman, Executive Director of Rural Initiatives at Bakersfield College, Claudia Catota, Chief Diversity Officer and Special Assistant to the President at California State University, Bakersfield, and Jane Maineni, Inclusion and Diversity and Engagement Lead at Era Energy. So if that sounds interesting to you, I believe Hillary just sent out the link to register in the chat, so you can go ahead and click that, and we hope to see you again next week. Thank you so much for joining us. Have a great day.